Welcome to the Business Finance Podcast, brought to you by the Best Finance Group, bringing you expert insights, real-life case studies, interviews, and the latest industry news. Join us every week as we cover everything you need to know about business finance. Hello and welcome to the latest episode of the Business Finance Podcast. He's Jack Seymour.
He's Phil Murphy.
Yes, and it's episode 12 of season 2, so we're going to do a bit of a review today. We're in Bristol. Our offices are just over the road there, aren't they? Clockwise.
Yes, yeah.
It's good. We've got some lenders are in the building as well, which is always really handy for us. So yeah, we're just going to have a review today. We're going to talk about what we've covered in series 2, and mainly it was a bit about startups and funding, different ways to fund startups. And then it was growing your customer base, protecting your customer base, and then we've done a lot about exit strategies and acquisition, growing by acquisition.
Yeah.
So we'll sort of just have a quick conversation really about what we've covered this season, and well, you can start off just by saying the state of business at the moment, the type of inquiries you're getting through, and you know how that sort of reflects with some of the challenges we've solved this season.
Yeah. I mean, if you're a business owner and you're watching this, this could be very helpful for you, and it should be as well. So I think there's quite a few challenges which business owners are facing at the moment, one of which is employment costs and the rising cost of national insurance and inflation as well.
Yeah.
You know, staff members are understandably so demanding higher wages because of inflation, and this is putting pressures on the business and the business owner. I've only had 3 conversations this week already about wages and staff costs, and this all gets bundled into cash flow.
Yeah.
I would say cash flow is our biggest inquiry which we have.
100%.
We're struggling for cash flow. Business, one of my clients, massively profitable, making about 180,000 net profit per annum, but they're still struggling for cash flow.
Yeah.
So what can be done about it, and why are they in this situation? So we looked at their debtors, and we quickly identified they're just simply not getting paid quick enough.
Yeah.
You know, and that extra 10-15 days that customers are waiting to pay them is really impacting them. So we didn't want to use invoice finance, which was a request of theirs, which is completely understand. So what we did, we put in a revolving credit facility.
Yeah.
But this was backed against their debtor book. And this is more and more common.
Yeah.
So if you are an invoice finance user and you are looking for an alternative, a revolving credit facility could be an option for you.
Yeah, I had exactly the same. I had someone who had a 10-day window.
Okay.
That every month he's getting this cash flow issue in that window. And that's exactly what I've done as well. We're putting a revolving credit line in place.
Yeah.
Start off at 40,000-50,000 pounds, cover wages, cover all those immediate overheads. So yeah, that's like you say, and that's again backed by the debtor book.
Yeah.
And I find that is, and it's quite quick. We can get decisions within 24 hours, sometimes even like within a few hours, can't we?
Yeah, same day. Yeah.
So that's certainly a challenge that we're both seeing, isn't it?
Yeah, I would say another one is tax liability. So tax funding. This has really become more prevalent over the past 6 months for us.
Yes.
VAT funding.
Yeah.
We've done 4 VAT loans already so far this month. And VAT loans are a thing which people aren't aware of commonly, but really can help to spread those payments, because everyone gets to the end of the quarter, they don't have the cash in the bank to pay the VAT, or they do, it's going to stretch cash flow. Why not split it down to monthly? Why not have that monthly payment where it will maintain cash flow for you, because you won't have a large payment at the end of the quarter. The interest that you pay on that VAT loan can come off your corporation tax. Everyone's a winner. So, you know, and most importantly is keeping HMRC happy. Because a lot of people, business owners say, well, why don't I get time to pay, Jack? If I need VAT, why don't I get time to pay? But actually, HMRC will only offer a time to pay so many times. So if you have the ability to keep them happy and very much keep that as a last resort, then it's an option. Because
if you are going for other finance and you've been in it, or you are in a time to pay, that can sometimes sway the lenders, you know, on the credit panel. So that can not always, but you know, it's another thing you have to explain. Which if you've got already explained 2 or 3 things, where that CCJ came from, which got sent to the wrong address, or whatever it was. But with VAT loans, people have that problem. Will tend to have that problem every quarter. And a few things you can do, even if it's up to 2 weeks late, you can still use a VAT loan. If you've paid the VAT loan, I think it's within 30 days. You can retrospectively fund that VAT loan. So if you've paid the VAT loans, keep HMRC happy, and you're going, oh, I shouldn't have done that, you can still get that VAT loan and spread it over 3 quarters to make it a bit more manageable for you. Often there's no PG.
Yeah, up to 150,000. Quite often there's no PG as well.
And the other thing is, once you've got that set up, you can use it again and again, so you don't have to keep applying every time. So that's a big, you know, if you have come to the end of the quarter and it's happened again, you know quickly that you should be able to just quickly get that funded again.
Yeah, so those are some of the benefits of that funding and tax funding.
Yeah, same with corporation tax. That's, you know, towards, well, different for everyone, I suppose, but that's another thing that we fund.
Yes,
corporation tax.
Corporation tax, you can spread it up to 9 months, and the client has, you know, as a business owner, has the option to spread it over whatever term they feel is manageable based on the monthly repayment.
Yeah.
In the M&A space, our mergers and acquisition side, we're busier than ever.
Yeah.
I would say.
And actually, from season 2, we did about 6 videos on buying a business, selling a business, how to finance an MBO, how to finance an MBI. We'll put the links up in the description. They're the ones that are getting most traction. I think there's a lot of people seeing the opportunity in it at the moment.
And if you do watch it, please do give it a like, share.
Yeah, give us a like. We do like a like, don't we? Don't get many likes. I'm sure you're liking the videos, but we're not getting the actual like. So if you could, that'd be great.
Yeah.
That they've proved we're getting the most views on those videos, so we are doing a bit more of those. And actually, it's a good time to mention next series 3. We've already got guests lined up, and that's going to be accountants, tax advisors, business growth and exit consultants. Hopefully we've got one of our top lawyers coming on as well. Yeah,
so everyone,
it's the deal team, isn't it?
The deal team that can be surround and complement you guys as business owners, that when you come to ourselves, actually we do have a host of other services which we can help you with as well. So everyone can bring their own skill set and talk about what they do.
Yeah.
Because if you are buying a business, you will need a lawyer. You know, if you are selling a business, likewise, you will need a lawyer.
Yeah.
And you, of course, you want to know the tax implications for you as well. So we can bring someone on season 3.
Yes. Yeah. The other thing is business valuation. So we have a client that we're working with at the moment needed to get 3 independent quotes, which we've now done for him. So again, that's something that's really one of the starting blocks, isn't it? If you're looking to buy something, especially in an MBO, if you're looking to buy out a shareholder, you need to agree on a price really before you can do anything. So an independent valuation is often the best way to do that, isn't it?
Takes all animosity out of the situation, because it's an independent valuation, and then you know the price that you're buying, or on the flip side, the price that you're selling those shares for is correct and, inverted commas, fair. So
So it's those type of things. So we're going to be talking about more of that, I think, next season. So so we're open. We're here to help. So if anyone out there is looking for any type of business finance, that could be loan, consolidating your loans, invoice finance, asset finance. We're doing quite a bit of asset finance lately, actually.
Yeah, and commercial property as well.
Yeah.
It's always worth mentioning commercial property.
Yeah,
bridging.
A couple of big bridging ones on the go at the moment.
Commercial mortgages and development finance.
Yeah. So I think that's about it for today, and please subscribe to the channel, please like and share this with anyone you think might be interested in learning more about business finance and the strategies and the tips that we go through. Thank you for all those who have subscribed and who've joined us through season 2. Thanks for watching, and we'll see you on the next one.